Hello traders, welcome back to my YouTube channel. In this channel, you learn how to trade like a professional and to become profitable in the market as well. All right. So in this video, I'm going to walk you through uh, you can actually a detailed explanation on how you can use the Tradingview drawing tools. All right. So how you can use the Tradingview drawing tools. All right. Without further ado, Tradingview actually involve a lot of a lot of trading tools. Okay, drawing tools. All right. We have the support and resistance. We that's the rectangular tool. We have the trend line, we have the test, we have the Fibonacci retracement, we have the long positions, and a lot others of trading drawing tools that we have. So in this video, I'm going to walk you through on how you can use all of these effectively. Okay, how you can use all of this effectively. If you are new to this channel and you miss my last video I dropped and I teach on how you can actually use Tradingview like a pro, please go and watch that video so that you can know how to sign up and register in Tradingview if you are new in this channel. All right, so let's get started. Let's get to why we are here. So if you are just new as well, for these are the basic drawing tools that I use pertaining to my own trading style. Okay, these are the major drawing tools. This is the trend line. This is the rectangular ray. This is the Fibonacci retracement, the long position, the short position, the price range, the lighter, the arrow, the rentago, the part two, and then the test, and many other trading tools, trading drawing tools that we have, trading view drawing tools that we have actually. But for this, these are the ones I use of recent. These are the ones I don't need to full all of my screen with a lot of them. All right, these are basically the ones I use consistently. All right, so this is what I'm going to be sharing with you today in this course. So for the first one is actually trend line. So trend line is actually used to determine the trend. All right. So we have an uptrend, we have a downtrend. It's an uptrend in case the market is going up. You draw it upwards. All right, connecting um at least two lows should be connected. At least two lows should be connected. Let me take you down to the chart to show you. All right, so it's like for this is good and it's a downtrend, and this is an high. You connect uh at least two two eyes. You connect at least two eyes. Now, basically, this is how you draw your trend line connection to at least two uh lines, two eyes. For if it is a downtrend, you connect at least two eyes. And if it's an uptrend, you connect at least two low, expecting that a touch of the trend line at the third time is going to be a a selling opportunity for a downtrend. Then if it's an uptrend, it's going to be a buying opportunity for uh for that of an uptrend. Okay, so let's move on to the next one. The next one in my tool is this horizontal ray. Now, this horizontal ray is basically I use it to highlight my price range. Okay, the price I want the market to come, and sometimes I also use it to add alerts to the market. I'm going to show you right now. So for this, and this is the second touch of the trend line. So I'm going to put a price, the horizontal ray here, to highlight this place such that I'm going to expect that at the point the market comes here, the market should alert me that price has come to the previous high. All right. So right now, if I want to add an alert to this, I'll just simply move down here, okay, to click on this plus button that's close to this, and you see add an alert. So I don't need to waste further time to start typing in numbers. Basically, it add the alert for me, just like what you are seeing, that the alert has already been added. Okay, such that when the market comes here now, at any point, the market is going to alert me. Trading is going to alert me that price has come to that level. And this is the first touch, this is the second touch, and then this is the third touch. Now we are not seeing a third touch around this zone, rounding zone, and it came and it touched this place. If we are to be live, Tradingview is going to alert me. It's telling me that price has come to this level. So and then I just have to quickly what enter into my short positions. So just to skip through all of this, I'm coming back to them. The short position is used to take a what? A sell opportunity in the market. Okay, it's used to take a sell opportunity in the market. So such that this candle closes now and I enter in for a sell here. Then my stop loss is going to be below above this high bit. And then I'm going to target this very low that is here. Okay, target this very low based on your own risk management as well too. So you can see that with this very simple trend line, connection of a trend line, you have won a trade today. All right, so this is I use the trend line, the horizontal ray, and then the positions. Okay, then as well, I also use this very trend line as well to to highlight sometimes just like what you are seeing here, to highlight my break of structure, to highlight my change of character as the case may be. Okay, as the case may be, I also just use it to highlight uh, all of this and then to show me, to give me a perspective of what I'm looking for in the market. All right. So you can also, I can also change like this. For this is trend line. If you want me to guide you through, now I customize my own like this just to show you right now. Okay, you move to this very settings. Okay, when you see setting, you type trend line and then you change the settings and then you can add it to your templates. All right, so doing that, it will then show right in the drawing tool and this is the pattern or the template you are to use, you are using it for. All right, so move on to the next tool that is here is the Fibonacci retracement. All right, in my previous video on how to use the trend line like a pro, I speak about the Fibonacci retracement. So, but let's do that again. The Fibonacci retracement is used to determine the end of a retracement, to know when a continuation or an impulsive phase will continue. So, like for this is the starting of a trend here. All right, an impulsive move. It came all the way down. So, before the market starts, when it came down to this point, started buying off to our Fibonacci level. So right here, if price retraced up to this place, all right, it came to the 50%. 50% was not able to hold it so strong. And then it now came to the 61.8%, all right. And then there was a reaction and the market started selling down. All right, so the Fibonacci retracement, it gives you or it tells you when when a retracement is about to end. So the retracement end at this between the 61.8 and the 78.6 retracement Fibonacci retracement level. So that's basically how you can use the Fibonacci retracement for a downtrend. You start by connecting the high down to the low of the trend. Then if it is an uptrend, you connect the low from the low to, okay, let me show you basically on this very uptrend movement. If it's an uptrend, you connect the very low, okay, you connect the low down up to the high, okay, such that when you what you are seeing now, let me delete this off so that you can see clear. Such that when you the market retrace down to any of your level here, the 50% or the 61.8 or the 78.6. If you trace down, that tells you that the market is tired of selling and is wants to buy if it gives you any kind of candlestick confirmation. Just like what you see here, the market retraced down and you pass the 50%, it passed the 61.8%, and it came all the way to 78.6% and it started buying off immediately. So you have to have a good knowledge of candlestick to be able to capture this move. And if you move to a lower time frame like 15 minutes, you may see a more clearer uh, uh, confirmation to enter in for the trade. So for like this, I'm going to use my long position here now to enter in for this buy opportunity. And now I'm going to enter in at immediately the closure of this this bearish candlestick. And then risk um, target this very place here. That will be my target, and then my stop loss is going to be just a little bit, you know, lower, just about 20 piece. I'm going to just target about 20 piece, or probably target, just put it right in this level for this video course sake. Okay, so basically that's how you can use the Fibonacci retracement confluence. It's just a confluence to determine the end of a trade. So basically, for those who are watching this video right now, it's just an tip. And for now, gold is now kind of a bearish from the 15 minutes time frame, such that we have already marked at this is a touch, this is a touch. So we're expecting that at a touch of this trend line, price will react. All right, from next week, price will react at the touch of this trend line around somewhere here. The touch of this trend line, price will react and it should alert you. So you can add a alert to this place, or you can as well use, okay, better still, you can as well use the Fibonacci retracement confluence to, okay, let's use the Fibonacci retracement. This is the beginning of the trend of the impulsive move, and this is the end of it. So you are connected it already. So we're expecting price to react either at the 50% or the 61.8% or the 78.6% level, and watch out for a good bearish candlestick pattern, okay, at this very level, either the 50% or the 61.8% or the 78.6% level. So at any point you see a bearish good confirmation, candlestick confirmations, is a time to ride in for a good sell in the markets. So basically, we put my price in all of this level. So price have touched the 50% right now, and there's no bearish candlestick confirmation yet. So my next alert, where I'm going to put my alert, is going to be basically this 61.8 retracement level, Fibonacci retracement level. And the next one I'm going to put is this very 78.6 retracement level. I'm still going to add an alert here as well. Okay, so I'm expecting price to react at any of this level. Once price comes to any of this level, it's going to alert me that price has come there. And I'm going to check in if there's any candlestick bearish candlestick confirmation before taking in for a sell. So I don't want to miss out from this opportunity. That's why I am adding this alert. All right. Okay. So we have talked about how to use trend line. I've talked about how to use the horizontal ray. We'll talk about how to use the Fibonacci retracement, the long position, the short position. Then we're going to talk about the price range. Personally, how I use the price range is actually I use it to actually determine the numbers of pips that I'm risking on a trade if I'm not using the Fibonacci retracement, okay? And also the numbers of pips I'm going to accumulate if the price goes in my direction. So let's basically take this for example, where this 61.8% retracement level is. So let's assume that I want to enter in, or I want to enter in from this level, this. So I drag it to get about the high, the very current high on the market. So if I'm supposed to enter in for uh, a sell, and then if so from here to here will be that about 100 and something pips. Okay, you're going to give us about 100 and 114 pips, there are about 114 pips. All right, that from this level to this very level is going to give me 114 pips. Then from here, from this level to this very level here, is going to give me about what are we seeing here? It's going to give me just about 119 pips. All right, it's going to give me about 119 pips. So basically, I use the price range to determine the numbers of pips that are risky and numbers of pips I'm going to accumulate. All right, in case if it goes in my direction. So you want to actually take the risk management. You want to calculate your risk very well before entering trade. All right, so that's the reason why I use this price range in the chart, and this is how you can also use it and add it to your complex as your trading style may be. All right, so let's move on to the next 2 year. The next 2 year is the highlighter. All right, the highlighter, and basically how I use the highlighter is actually connecting. I use it to to note the highs and the lows of the market, so that I won't lose guard of the concept of my own concept. All right, so basically while this how I use it, I like this very high here, and I like this low here, I like this high again, and then I like this very current low right here. So this is basically how I use it. I use the lighter tool, so that I use it to highlight the market structure of the market. It gives me, I use it basically to know the market structure, to take point of the highs and lows of the market. All right, then the next one is the arrow. Okay, the arrow is I just use it to majorly to indicate where I'm expecting the market to go to. So it's just like you can also use it to determine as well the pips. But basically, me, I don't use it to determine the pips in the market. So if you see now, you see some price level, but basically, me, I don't use it in determining the pips. So what I use is the price range. But what I use it for is basically uh for me to mark out my potential direction where I want the market to, I'm expecting the market to go to. That's I use the directional tool. Then this is the rectangular tool, very, very, very critical. Rectangular tool is used basically to mark out your resistance and then your support. Just in case you don't know what resistance is a point in the market, or a price level in the market where the price stop moving further to the upside, and then it crashes down or it started selling up. So for like example, this place is the resistance. Okay, once the market, as soon as the market touches here, it started selling off. All right, so this place is the resistance, and I apply this red to my resistance, and then we also have a support right here. So this place is my support. This place is my support level. Okay, let me change the color to blue. I love changing the color so that I will know what I'm doing. Okay, let me clear up this to look nice on the screen. So this is my support. This is basically my support. And then this is my resistance. Okay, this is my resistance. So how you draw your support and resistance is just by connecting, drawing for resistance, where the price starts selling off is your resistance. At any point the price starts selling down is your resistance. And at any point that the market starts buying to the upside, that level is your support. All right. So like for this, there is a new support that is formed already here that causes the markets to start going up right here. So there is a support right here. Okay, there's a support right there as well. All right. So you have known that there is no much difference between support resistance and the supply zone and the demand zone. Okay. So the concept still remains the same and then it's still the same. All right. So we can also use this rectangular tool to also draw your support, your supply zones and then your demand zones. All right. So for like this can be my demand zone or the other block. If anyone you say, you can call it according to your strategy. You can say that this is an order block, all right, or a demand zone, okay, or a demand zone. All right. So your demand zone is at any point that the last bearish market in the bullish move is your demand zone or your order block. And for this is going to be your supply zone. At any point that the very bullish candlestick that closes a very last bullish candlestick before the bearish move to the downside. You can tend to be your supply zones. Okay, let me clear off this so that it look clearer. All right, all right. So this will be your supply zone, and then this will be your support, your demand zone. So the concept still remains the same, and I use this same rectangular to draw both the resistance level, the support level, and that of the supply and then demand zone. All right. So in the last, okay, the second to the last tool here I use is the path tool. The path tool I use it basically to to draw the market uh structure. Okay, so I'm expecting that price comes and then continue falling down. All right, so basically what I use the path to draw to do as my own complex may be, I use it basically to draw the market structure. All right, so that's how I use the part two. Okay. So why for the last one, the test, I use it just to, you know, to do some tests in my charts so that I won't lose guard or I won't miss the concept or what I'm looking for in the market. So you can just type anything pertaining to whatever be what you are looking for. So that is how I basically use all of these tools in the market. So for those of you who are watching, this is just an expo to what the market is about doing in gold for this for a few times. This is 15 minutes time frame. So this is just for scalping. Okay, this is just for scalping, just to scalp off and take little profit. All right. So for those of you who are watching this video, if you like this video, please share, like, and then don't forget to subscribe. Okay. Thank you, and I wish you a successful trading journey.